Hello traders, welcome back to the channel. This is Jonah with Trading the Charts Pro, and guys, in this video I'm going to be answering the question that is on the thumbnail. Should we be buying this stock market dip? And I'm going to break it down, help you to understand when and why we should be buying any dip, and how we will use the overall market structure and the understanding of patterns to know when to buy the dip. Let's go. Alright guys, so here we have the S&P 500 big picture. We want to see when is it a good time to buy a dip, and that question has one and only one answer. Whenever the market pulls back, there is only one place technically to buy the stock market dip, and that is when the market literally has found a support. And how do you know when the market has found support? That's when you do an analysis of the specific pattern that the market is really trading in to understand when is the dip done dipping. All right, so when we look at the S&P 500, we can see in this situation the stock market is trending. The market is in an uptrend. So while the market is in an uptrend, the only time to buy the dip, and you can see these are the dips, right? So since we've been moving up, technically we had one dip here, two dip here, three dip here, and now we're at dip number 4. All right, so when we look at this, one thing is true about all of these dips, right? When the market dipped, or this S&P 500 dip, it technically dipped to around the 50 exponential moving average, and when the market dips to that level, we usually see buyers step back in, and that's where we actually start to buy the dip, because the pattern at that level is consistent, and we know based on probability that this is roughly the area that the market starts to turn around and start to move back up. And just like all these previous situations, 1, 2, 3, now number 4, the market actually dipped all the way down right to the 50 exponential moving average, and we can see the first day right here, day 1, buyers came in sharp, and on Friday buyers came back in as well. So is it too late to buy the dip? Well, technically Friday was the confirmation day to get in on the dip. Now this is where we start to use pattern recognition as our guide and the understanding of overall price action structure. All right, so basically we can see that the market made an all-time high, the S&P 500 to be specific, made an all-time high around 4,229.33. That's really the top of the market, the last high that the market had before the sell-off. So in this case, there is two technical things can happen. Given that we bounce off the 50 EMA, we can actually see the stock market do what it's done all the last dips. All right, so it dipped, got bought up, and continued to move higher. In this case, we're anticipating that the market will continue to move higher, but how do we know if the move is not going to continue? That is very critical. This is where two things will happen. Number one is either the S&P 500 comes back up to the 4,229 level, and then at this level we get a double top and the S&P 500 start to pull back down. And in this case, if it pulls back down, we have to be watching out to ensure that the market doesn't come down and break the trend, because if the market come down and break the trend, it means that this is the end of this very nice uptrend that we have been in for the last couple months. Technically, since around November when the market break out. So that's what I'm looking at. Now, number two thing that I'll be watching very closely is, does this market pull up just like it has right here right now, and then starts to roll over? And when that happens, that is just a quick sign to see that this was the all-time high for the market, and now the market at this level failed to make a new high. And if that happens, that is all sign. So what would show us really that the market is rolling over is if on Sunday or Monday, when the market opened, when future open on Sunday, if we see the market sells off and give us a reversal candle like this to the downside, then this means that the market is in trouble. The S&P 500 is in trouble, because now we're looking to come back down, and this is actually our first lower high, which will signify that if the market comes down and take out this level, then the market will be moving further to the downside. All right, so this is what I'm watching. I'm very keen on this 4,229 level. I want to see if the market can come back, touch that level, break out of that level, and that will signify that the uptrend will continue. If that's not the case, then we're looking for the opposite to be true. All right, so let's move on and see what is the NASDAQ telling us. All right, guys, so when we look at the NASDAQ, we're seeing pretty much a similar situation in the sense that the NASDAQ is also in an uptrend, right? We can see this is the very nice uptrend, nice bull run, boom, and then we run up again. But right around this level, something very critical happened, which I pointed out in my last video, that we have to be cautious of this level, because the market practically had a double top where the market hit resistance, or the NASDAQ hit resistance twice at the same level and was not able to break out. So basically what that had set up was a quick M pattern that brought the market back down. Right now, you know, we see the market pull back down, but it pulled back down right into the uptrending support. And this is critical because, guys, remember, the market can only do two things. Technically three. The market will move up, the market will move down, and the market will move sideways. All right, so in this situation, the market has pulled down. Is it time for the NASDAQ to continue moving back up, at least coming back to test its all-time high at 14,000 and around 63 30 right there? This is what I'm looking out for. So basically, in my mind, I feel like this is 100% based on pattern recognition, the levels that I want to be buying tech. Why? Because we see tech bounce off that support once, twice, 3 times, 4 times. Is this the 5th time? So I like it right here, right now. I'm anticipating tech to continue moving back to the upside, at least into the resistance level back up here. If we get a failure and NASDAQ, you know, start breaking down below the trend, then I'm anticipating at this point for the NASDAQ to come back down to these horizontal support level. And that's just a worst case scenario. I feel like this market is still 100% intact, and we will continue to move into this uptrend to the upside. But we still want to be vigilant to the opposite move of this market. So if it pulls back down, I would still 100% be watching this trend line to see, do we end up get a situation where this just come down, give us a double bottom of the uptrending support, and then continue to move back up. But at this level, I 100% feel confident that this is where I want to start scaling back into some tech. All right, because tech is just down a little bit too much in my opinion, and we may be getting ready to go again. All right, so now guys, when we look at the Dow has pretty much been running in a very nice uptrending pattern as well. However, over the last couple weeks, Dow ran into this ascending triangular pattern. We got the break out of the ascending triangular pattern, which pushed the Dow back up into this uptrending resistance level. And earlier this week we got the sell-off, and if you are not paying attention, you will get caught, because this day when the market gave us this reversal candle, that was the day you had to be taking profits and start moving back to the sideline as this thing come down in anticipation of buying it back lower. Okay, so now we see the Dow pull down into roughly this support level that it was holding at prior to the breakout of the triangular pattern, and we got a very nice 2-day bounce. So what I'm looking at as far as the Dow goes, do we end up continue to move up, which is highly probable, or do we end up seeing another reversal which take us back down and break this trend and pull us down to the downside? As far as sentiment goes, I still feel like, you know, things is still pretty much intact. We haven't got anything concrete that says, hey, we're gonna raise interest rate as yet, though inflation is actually ticking up. But you know, many economists think that this will eventually balance out as we get a little bit more time. Inflation will balance out. There's high demand for a lot of things right now, but I do personally believe that the demand will gradually stabilize, and hence inflation will probably just start to flatline back out to roughly, you know, into the area where it's supposed to be. So that's how I'm looking at this market right now. However, I do believe that tech is overdone, and tech is really where we should be looking to take some stuff up that has been beaten up extremely bad, and looking to the right and back to the upside. All right, now we're looking at IWM, guys. This is small cap stocks. You know, this sector or this group of stocks took a beating, but one thing is very consistent about at least what this thing is doing. It has been pulling down into this support level right around here. Initially, this was the level that we were holding until we break last week, but that breaking down didn't really go too far because we end up holding down here at the second support level. So what I'm really looking for into the IWM is, do we sell off back at this level, pull back down to the support, and then we move up? Or is this going to be a case where we just get a vertical move that takes us straight into a V and we continue moving back to the upside? This is how I'm analyzing the market right here, right now. And these are the levels that I 100% would be buying the dips, because one thing is very consistent when we look at all these charts is that the patterns are still intact. S&P 500, we pull down into the uptrending support, right? And from there, the market bounce, continue moving higher. So we are pretty much seeing something in the sense that the market is not broken. Though the sell-off was sharp, it was hard, the market big picture is still 100% intact. All right, so guys, if you did find some value inside this video, I look forward to see you on the next one. All right, thank you for watching.